whenever there's a crisis, it's always the G7 is meeting, the G20 is meeting, whatever, right? All they're ever doing is putting out the punch ball and just making sure they are flooding the system with fiat currencies.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we got Jason Hartman with us. We're going to be talking about what's in store for you in 2024. I think you're going to be surprised by some of the trends that we both identified. And hey, we could cut to the chase and just say it's going to be more of the same, but that wouldn't be fair. It's more of the same, but it's a lot of other trends kicking in as well. Jason, great to have you back on the show. You're with us now from your Southern Command.
Southern Command, like Rush Limbaugh used to say it that way.
Yeah, yep. You just expanded your operations there, and I hear a lot of activity in the background. Hey, what is in store for you and for us in 2024?
Well, thankfully, the Fed has finally decided to do the pivot. I think the pivot is long overdue. I was very critical of the Fed because I think they let the cheap money run for far too long. Jerome Powell should have curtailed that much sooner. And then his whole hallucination about transitory inflation, he was obviously wrong about that. So I was super critical of the Fed, and I do think they really screwed things up. But I think at this point, they probably have engineered the soft landing. And of course, everything I say always comes with the disclaimer, barring some black swan event, right? I can't predict another pandemic. Those are planned by the powers that be. War, pandemic, whatever. But if things continue in a normal economy, I think actually things are going to go pretty well. It's not without its problems for sure, but specifically when you look at the real estate market, that has surprised everybody except me. I have been widely criticized and trolled online. Every time I posted a YouTube video over the last probably 4 or 5 years, people were talking about the crash, this, that, and the other thing. And I told them, no, they're wrong. And they said, no, I'm wrong. And I was right. And they were wrong. It's pretty easy, Kerry, to figure this stuff out sometimes because it's just a matter of the most fundamental law of economics, supply and demand. And so I got some good data to share with your audience on that today.
All right. So supply and demand. Hey, I was out there, in the midst of the pandemic, desperately searching for a house to buy. And,
and you found a good one at a good price.
Yeah, I found it. Maybe the price wasn't perfect, but I caught it. I caught the wave and I knew it. And I was telling all of you out there, buy assets that can produce income because that is the key to surviving inflation. Now, let's go back to inflation here. So they're loosening up the spigots, or at least they say they're going to. Michael Pinto, noted economist, said Powell originally said, or the Fed said 3 rate cuts, and Wall Street immediately extrapolated that into 6 rate cuts in the coming year. But what about the dollar? What about the bond market? What about the deficits? Is cutting rates really going to help things, or is it going to be the equivalent of pouring gasoline on the fire?
Well, that's a great question. And Kerry, it's always pouring gasoline on the fire. All these people know how to do. Whenever there's a crisis, it's always the G7 is meeting, the G20 is meeting, whatever, right? All they're ever doing is putting out the punch ball and just making sure they are flooding the system with fiat currencies. That's really the major tool of the governments and central banks around the world, including our government and central bank. And so the long-term business plan for governments and central banks is inflation. And especially for the US, inflation is very beneficial to the United States because, the United States is the largest debtor nation, and it can inflate away that debt through a strategy that I've been teaching for almost 20 years now called inflation-induced debt destruction. We've talked about it before on your show, and I talk about it on my show all the time. And so we definitely are in an environment where we will have persistent long-term inflation for quite a while. I think the ultimate thing that will change that, maybe in the 2030s, maybe not until the 2040s, we'll see, and that is a real shift in demographics. The other thing we have to remember that's a wild card is technology, because if you look at it like a boxing match, and you think in this corner we have bad fiscal and monetary policy, and in the other corner we have technology. And the question is, when the bell rings and they go in to fight, who will win? Because technology is deflationary and bad fiscal and monetary policy is inflationary. So this really is a war between the two. But I will say this, technology is an evolutionary concept because each technology builds on the last, but bad fiscal and monetary policy is just pure vote buying and stupidity. And that's infinite, right? So we will see who will win, whether it be technology, the deflationary pressure of technology, which, look, technology is not a new thing. It's been around for quite a while. And we constantly see the deflationary pressures of it. But if you really think about it, we have already exploited the last cohesive cheap labor market on earth, and that was China. And now China's not that cheap anymore. They're trying to make the next market for cheap employment be Africa, but Africa is a really dysfunctional mess of a bunch of different interests in a bunch of different countries. So it's not going to be the same as China. But again, technology is overall deflationary. Bad fiscal and monetary policy, of course, inflationary. So we'll see who wins that. But I think the bet on inflation being the long-term the long-term trend, because it is the friend of governments and central banks, is probably the best bet. I mean, there will be bouts of deflation in there or disinflation, but long-term, I would bet on inflation.
Well, Will Rogers said ignorance got us into this mess and ignorance will get us out, right?
Yeah. And Yogi Berra, he's got the best quotes. The future ain't what it used to be.
Yeah. Hey, so what about inflation for this coming year? They're opening up the monetary spigots. Gold, Bitcoin, all the alternative investments are basically the canary in the coal mine or the gold mine. And can they go too far with this, Jason? Can they inflate to the point where the currencies become all but worthless?
Oh, of course they can. And that is the long-term plan, but it won't be the short-term plan.
How long? How long is long-term? In the long run, we're all dead,
Well, yes, as John Maynard Keynes said, he was right about that. Look, none of us know, because ever since the 70s, go back to all the doom and gloomers and the doom and gloom apocalyptic movies of the 70s, like think of Soylent Green, Rollerball, all of these movies, right? Everybody's been predicting doom. I mean, go back 250 years to Malthusian economics, right? And somehow they managed to keep kicking the can down the road, and humans are a resource. And humans solve our problems. Yes, they create them, but then later they fix them.
They they solve the problems just like government. Well, government doesn't solve any problems, though. That's the problem. If they're solving problems, then maybe we could kind of go along with the plan here. But they're not solving. They just create more problems in their efforts to solve problems.
I think they do both at the same time. And on the net of it, Government obviously should be much smaller because government is bloated, corrupt, and inefficient. So
On a
smaller
good day.
government is a better
On a
government
good
for sure.
day.
Yeah, yeah.
Hey, but for the coming year, so we're going to see more inflation,
Yep.
all right, which is going to be good for assets, right?
Yep.
But we're also going to see war too, more war. We got like Venezuela saying they're going to invade Guyana. We got China saying they're going to invade Taiwan, which I don't personally believe they're going to do, but if they get desperate enough, who knows?
Yeah.
And we got North Korea rattling sabers. We got Iran. I mean, we still have the Russia-Ukraine war, how much longer that will continue. I think I used to say about my attorney that he would defend me till my last dollar. And it looks like Ukraine will fight until the last adult male or even female has been blown up by an artillery shell. How much longer does that go on?
I don't know. We will see. All these wars are terrible, but as I've long said, as long as war is profitable, there will never be peace. Governments, central banks, and of course, defense contractors make a lot of money from war. It's a very lucrative business. So, we've got to take the incentive out of that, but that's a whole nother discussion.
Smedley Butler, War is a Racket.
Right. I remember that. That was a very old book that talked about that. So, Kerry, when we look at we've looked at the broader economy, but maybe we should drill down onto the real estate market, which of course is my specialty. And I'd like to share a few things on that if I could.
Sure. Please share your screen. Let's see what we got.
Yeah. So this is the most fundamental law of economics cannot be denied, and that is supply and demand. And there is still a very significant housing shortage in the United States. Do not be fooled by the purveyors of doom on YouTube who say differently. They are simply lying, and they've been saying the same thing for many years, and they have been wrong, wrong, wrong. Eventually, every doom and gloomer will be right. Okay. I mean, Robert Kiyosaki, when he had Peter Schiff on his show, and I've had Peter Schiff and Robert Kiyosaki on my show, and so have you. And Kiyosaki introduced him saying, Peter Schiff has predicted 19 out of the last 2 recessions. So, and I don't know why those AI balloons go on there. I got to fix that. But, look, even a broken clock is right twice a day. And as soon as they're right, they're going to say, see, I was right. But the danger is that so many people listening to these people and falling for their bullshit, they just miss out on opportunities over and over again. Well, the slow and steady person, like the tortoise and the hare, they are the ones who get rich in the meantime. I mean, look, ever since 2011, coming out of the Great Recession, everybody has been talking about a market crash. I mean, I have heard this every year. I've been doing this for decades, and it just doesn't happen. The 2008 financial crisis, that was a once-in-a-lifetime black swan event. It was the first time something that bad happened in 80 years, in a lifetime. Okay, since the Great Depression, which was, of course, much worse than that. So, look, we've got a centrally planned economy, for better or worse. We have what we have, and the central planners will react, and they will turn on the money printers. And yes, that game cannot last forever, but it can probably last a lot longer than any of us will live.
We can only hope.
We will see. So here's the picture.
Longer than my kids and grandchildren as well.
Yeah. So here's the real estate picture. We ended the year with 513,000 homes for sale in the United States. Now, the overall housing inventory in the United States is 140 million homes. Okay. So just think about it. About 0.3% of the inventory is actually for sale. That's nothing. During the COVID era, the lowest point of inventory was 240,000 homes. So since the low point of the COVID era, inventory has slightly more than doubled. But compared to what? a normal level of inventory, pretty much any expert will agree on this, that a normal level of inventory is 1.2 million homes for sale at any given time. And that'll give you somewhere around 6 months of inventory. That's a normal balanced market. It's not a bad market. It's not a buyer's market. It's not a seller's market. It's a balanced market. 1.2 million homes. Right now, we have 513,000 homes. That means we have a shortage of 700,000 homes in the United States. So that's the first thing to understand. Now, if big layoffs come, it's fair to ask, will inventory increase? And I'll tell you something. We have 135 million people, or 135 million homes that have the lowest interest rate mortgages in forever, literally in 5,000 years. That's how low their interest rates are. And if you don't believe me, read a great book by the late David Graeber called Debt, the First 5,000 Years. They have tracked interest rates back 5 millennia, okay? So these mortgages have 28 years left on them. These people are extremely comfortable. They have mortgage payments that are dramatically cheaper than any new mortgage payment they would have on a new home. They are dramatically cheaper than renting a house or an apartment. So these people, 135 million of them, are extremely comfortable. 65% of the homes in the country have a mortgage at or below 4%. 25% of the homes in the country have a mortgage at or below 3%. And guess what? Those are only statistics based on the mortgaged homes. 42% of the homes have no mortgage at all. So where would this rush of inventory ever come from for the next 28 years? These people have a deal they're not going to give up. And so far, the last 3 years, it has proven that. So even if we see unemployment increase quite a bit, which is a difficult thing to happen. Another book I'd recommend is a book called When the Boomers Bail. And I interviewed the author on my show, Mark Lotman. And what he talks about is how we will have a systemic labor shortage really for the rest of our lifetimes. He makes an interesting point in the book because the boomers just didn't have enough children. He says, if you own a business, anybody that you'll hire in the next quarter of a century has already been born. There's no new blood coming into the labor market. Okay.
Very true.
So if we have a systemic labor shortage, that means it's unlikely we're going to have high unemployment, and it is likely we are going to have upward pressure on wages, which is one of one of the biggest pressures on inflation. It's very sticky because when you have wage inflation, all the people earning those wages spend that money into the economy, and you have more dollars chasing a limited supply of goods and service, the recipe for inflation. So, there is just really no data that says there is going to be some kind of big crash. Let's answer the famous question I talk about on my show, compared to what? So inventory is down 10.3% year over year from last year, and it's down 49.3%. It's down by half of what it was in 2019. And in 2019, we did not have a bad market. We had a very strong market in 2019. So, there is just no sign in the data that there is going to be a real estate crash. Now, all real estate is local. Different markets act differently. Of course, we've got to consider that. But overall, when you look at it nationally, and you especially look at it in terms of entry-level housing, there is just no data to support a crash.
All right.
And I would be happy to debate that with anybody.
But in certain markets are weaker than others, right? In the current time. Even in Florida, inventory has gone up a bit from when interest rates were at that 3% and below level. So there is, I do agree with you that, because I'm one of these people with a 3% mortgage, and I was thinking of downsizing a while ago, but the only way I can downsize is just to buy it for cash.
You'd be downsizing to a more expensive situation.
Yeah, exactly.
Downsizing makes
What's
no
the point?
sense. Yeah.
Right. So all these boomers like me who refinanced or bought or whatever are basically sitting in a position where downsizing, you wind up getting far less for far more.
Yeah.
I should say. Yeah.
It's a
for far
form of
more
golden
payments.
handcuffs. In the corporate world, Kerry, how, they talk about the golden handcuffs, right? We've all heard that saying.
Right.
That's what 135 million of 140 million housing units has. It has the golden handcuffs. Okay. They just have a very comfortable situation with very affordable mortgages, or 42% of them who have no mortgage at all.
Yeah, it's amazing. Whoever thought we'd be in this position?
It really is quite a unique market position to be in, no question.
So then housing is never going to be more affordable than it is now, and it isn't very affordable now, is it?
Well, it's very affordable for the 135 million people who have the great deal. It's not affordable at all for new entrants coming into the market. So look, in 15 to 20 years, there is going to be a giant transfer of wealth from baby boomers to their millennial children. Okay. And as that happens, the millennials, who have been big complainers for quite a while, are going to suddenly be very, very rich.
Well, some of them will be, yeah.
Yeah. Not all of them, certainly, but some of them definitely will.
So true. All right. So what other trends we looking at for the coming 2024? Inflation's going higher. Real estate prices aren't going to go lower, and perhaps are going to go higher even still, right?
Hey, look, as everybody's been talking about a real estate crash, as the cost of money, real estate's a credit-based asset class, right? I mean, and we're talking about housing, not commercial real estate. That's a different world, by the way.
Yeah.
But housing is a credit-based asset because most people finance it. The cost of money has tripled, and it's still appreciated. I mean, that has shocked everybody but me. I knew that would be the situation because of the simple supply and demand dynamics and the fact that we have 135 million people who are extremely comfortable and cannot get a better deal than they already have.
They really can't afford to move.
They can't afford to move. Their deal's too good.
They can't afford to not stay where they are.
Yeah.
It's such an anomalous thing. And this is when we look at the Federal Reserve and we see how they distort markets and how they wind up, causing these imbalances.
Yep, no question about it. They are the ultimate market distorter. Absolutely.
Ain't that the truth?
Yeah.
So what else do we have in store for us here? More unrest.
We have in store a speaking engagement that you have coming up.
Oh,
and
yes,
is
of course.
on a gorgeous cruise ship coming up in April. We are hosting our Empowered Investor Cruise. And if anybody is interested in hanging out with me, with Kerry Lutz, with some of our clients and other speakers, we've got a 5-day cruise leaving out of Fort Lauderdale, 2 days of education at sea, 3 days in port on the gorgeous brand new Celebrity Apex. This is one of their Edge class ships. It's spectacular. It's brand new. So it's just a spectacular ship. And if you go to empoweredinvestorlive.com, you can get a ticket for the 5-day cruise coming up in April. So really, we'd love to see you all there. Kerry's audience, a lot of the Financial Survival Network people have been clients over the years. And this is a great chance to hang out with us and have a great time and do a lot of learning and networking.
Yeah, and if you're going to be in Fort Lauderdale, maybe I'll have a meetup the day before the cruise leaves. in Fort Lauderdale. And the link is in the show notes to this interview on Financial Survival Network. And we'd love to have you there. And yeah, it should be a lot of fun, Jason, and educational as well. Hey, so looking forward here, what about this increased civil unrest, not just in the U.S., but around the world? We going to see that trend subside, or does it get worse?
I think that trend will at least continue at its current level, if not get worse. But a lot of the folks causing the civil unrest, you know, they are growing up, hopefully, and getting some common sense. You know, if you're under 30 and you're not a liberal, you don't have a heart. If you're over 30 and you're not a conservative, you don't have a brain, as the saying goes.
Churchill said that.
Yeah, that was, I think, Winston Churchill who said that.
Yes, Winston Churchill. And someone else, I don't remember who said it, just said that a Democrat is just a Republican who hasn't been mugged yet.
Yeah, exactly. Exactly.
But I'll tell you one thing. I was in Woodland Hills, California for a conference. All right. So that's like upscale area. There's a homeless encampment right in the middle of the place.
Unbelievable. Yeah.
And I went to CVS. Now, you heard that basically California has decriminalized shoplifting because you can't get arrested for a felony unless you steal $950 or more of merchandise. I went to CVS, Jason, and every single item is locked up. I wanted some eye drops for $20. I had to wait 15 minutes for somebody to get their butt over there and open the case.
Yeah, well, my former home state of California, the Socialist Republic of California, is such a disaster. Gavin Newsom, normally in a logical world, he would be indicted for treason, literally. I mean, it's unbelievable what he gets away with. He just is introducing this plan to spend $3.1 billion to give health care to illegal immigrants when so many citizens of California don't have adequate health care. But he's abandoning the taxpayers of his own state and giving that money to people who entered illegally. It's absolutely unbelievable what these people are doing. But, you know, we have what we have. And, you know, what most people need to do is just keep their head down, invest, buy good quality assets that everybody needs, right? That have universal need, like income property, right? Everybody needs a house. There's a shortage of them, and control those assets and use mostly 80% of the bank's money to buy them. It's the ultimate formula.
So lever up, make sure that you're buying assets that cash flow, right?
Yep. Good quality assets in what we call linear markets, not the cyclical markets. And you want to be in landlord friendly jurisdictions. You don't want to be in places like California, New York, or these places that are unfriendly to business people, landlords, and good tax-paying citizens.
Yeah, you think it's any coincidence, Jason, that these landlord unfriendly jurisdictions are the same ones that are high tax, that are have below subpar growth rates compared to the landlord friendly jurisdictions?
Yeah, no, it's the future is in the places that are friendly to the citizens, the taxpayers, the businesses. Those places are the future of the country. People after the COVID era, people just got completely fed up with the restrictions on their freedom, being told what to do. I mean, with these absolutely ridiculous rules that literally made no sense whatsoever. So I think people got the message, and the future is in, you know, the right-leaning environments.
Well, will the people who are left in these undesirable places finally rise up and rebel? I kind of have my doubts about it, but I do agree with you. Capital goes where it's treated best.
Absolutely.
And it's not being treated well. It's being abused in these blue states. Let's face it, they're blue states all of them, virtually all, and the chickens are coming home to roost. And well, hey, appreciate you coming on. Again, make sure you take a look at the link. The link to Jason's cruise will be in the show notes on financialsurvivalnetwork.com. Jason, just tell us again where we find you, where we listen to your podcast, your work.
My main website, jasonhartman.com. I'm on YouTube, and my main podcast is called The Creating Wealth Show. Just look up Jason Hartman on any podcast platform. And then lastly, the cruise is at empoweredinvestorlive.com. So you can connect with me any of those places.
All right. Excellent. Jason, we'll talk to you again. Happy
investing.
2024. And maybe I'll take your advice this year and buy some real estate other than my house. And hey, we'll see you on the cruise. Thanks.